Welcome to class, students. Today in Module 7, we'll be looking at insurance laws in Europe and the UK. Insurance laws in Europe and UK. Module content: introduction, the FSMA 2000 amendment, Prudential Regulation Authority, Prudential Standard, Financial Conduct Authority, then scope for insurance. Financial Services and Market Act 2000. The Financial Services and Market Act 2000 is the cornerstone of UK financial services regulation, including insurance, structures and purpose. The Act established a comprehensive regulatory framework with the following regulatory objectives: the market confidence, public awareness, consumer protection, reduction of financial crime. Key provisions for insurance are the regulated activity, that is part 2. Section 19 establishes the general prohibition against conducting regulated activity without authorization. Regulated Activity Order 2001 RAO defines insurance activities, including affecting and carrying out contract of insurance, that is Article 10. B. Authorization and permission, Part 4. Threshold condition for authorization, that is Schedule 6, and variation and cancellation of permission. Passporting right, pre-6. Passporting right. Let me take out the Section B. We have authorization and permission, Part 4. Threshold condition for authorization, Schedule 6. Variation and cancellation of permissions. Then passporting right, pre-6. We have regulatory powers, rule making powers for regulators, investigation and enforcement powers, penalty and sanctions. We have D. Market abuse, Part 8. Prohibition on market manipulation, insider dealing provision. E. We have Lloyd of London, Part 19. Special regulatory framework for Lloyd's, Council of Lloyd Regulatory Rule. We have FMSA 2000 amendment. We have the Financial Services Act 2012, Financial Services Act 2021, Financial Services and Market Act 2023. In the Financial Services Act 2021, abolish the FSA created by, that is the Financial Service Act, created the PRA, that is Prudential Regulation Authority, and the FCA, Financial Conduct Authority twin pegs model. So when we talk about twin pegs model, twin pegs in insurance refers to a financial regulation model that splits the supervision of financial institutions into two separate but coordinated pegs. When you split financial institution into two, split financial supervision, or split the supervision of financial institution into two separate but coordinated pegs. While the Financial Service Act in 2021 post Brexit reforms and regulatory frameworks updates, while they also have the Financial Services and Market Act 2023 major post Brexit overall creating new regulatory framework. The twin peg regulatory model, following the 2012 UK reforms, UK financial regulation operates under a twin pegs model with separate prudential and conduct regulators. Prudential Regulation Authority (PRA), The PRA is a subsidiary of the Bank of England responsible for prudential regulation of insurance, banks and certain investment firms. Legal basis: we have Bank of England and Financial Services Act 2016, Financial Services and Market Act 2000 as amended. Then the regulatory objectives are general objectives, the insurance objective, the secondary objective. The general objective promotes safety and soundness of regulated firms, while the insurance objective contributes to securing appropriate protection for policy holders, while the secondary objective facilitates effective competition. Scope of regulation: we have deposit takers, banks, building society, credit unions. Then we have the insurance. In the insurance we have the life insurance, the general insurance, the composite insurance and reinsurance. While major investment firms are significant investment firms designed by the FCA. So we want to look at the standards. We have the solvency requirements, the governance standards. Let's look at the solvency requirements. For solvency requirements, we have implementation of solvency at derivative. We have the prudential standards. In the prudential standard, we have the solvency requirement, the governance standard. In the solvency requirement, we have the implementation of solvency 2 directive, that is non-UK modified. We have solvency capital requirement SCR. We have minimum requirement capital requirement MCR. We have own risks and solvency assessment ORSA. Then we have the governance standard, senior managers and certification regime SM and CR. We have the senior manager functions requiring approval. We have certification of other staff in risk bearing rules and conduct rules applicable to all staff. Underneath, we have the fit and proper requirement, assessment of competence, financial soundness, reputation. Then the governance arrangement, board composition, risk management and internal controls. So we also have in the prudential standard, we have reporting and disclosure, that's regulatory supervisory report, that is RSR. We have quantitative reporting template QRTS, solvency and financial condition report, that is SFCL, public disclosure. I have the regulatory reporting under the PRA rulebook. Supervisory approach: we have the judgment based supervision, we have the proactive intervention, we have the proportionality proportionality and we have the risk focus. In the judgment based supervision, we have forward looking assessment of risks, proactive intervention, that is early identification and mitigation of risks. We have proportionality, intensity of supervision proportionate to systematic importance. We have the risk focus, prioritization based on impact and probability assessment. We also have the Financial Conduct Authority (FCA). The FCA is an independent public body regulating conduct in financial market and conduct of all financial services firms. Statutory objective of the FCA, that is Financial Conduct Authority, it's consumer protection, secure appropriate degree of protection for consumers, market integrity, protect and enhance the integrity of UK financial system, competition, promote effective competition in consumers' interest. We have the operational objective principles: proportionality, sustainable growth, consumer responsibility, senior management responsibility, openness and disclosure, transparency, and desirability of recognizing different. We also have the scope of insurance. We have to conduct regulation of all insurance, dual regulation with PRA, sole regulation of insurance intermediaries and brokers, market conduct supervision, and consumer protection and fair treatment. Thank you for listening.